It is Tuesday, and you know what that means. In the second half of the show, we are joined by Tim Ord. Tim is the author of the Ord Oracle. You can go visit his website at ord-oracle.com. Check out his newsletter. Check out his book. Additionally, you can go to TFNN.com. Go over to the services tab. We have 2 webinars from Tim Ord. That is The Secret Science of Market Tops and 6 Secret Ratios Every Trader Should Know. If you are a tech trader, if you're just starting out, even for both seasoned and just starting out in technical analysis, check out these webinars. They are fantastic. Tim, how are you doing? We miss you the past 2 sessions.
Yeah, it's snowstorm here in the Midwest, so power is knocked out from Wednesday all the way into Saturday at 10 o'clock. So it was a mess. But
well, we definitely have some solidarity being in Florida with the hurricanes. So I'm glad you were able to get back online. So
yeah, we're back in business. So let's take a look at some charts here.
Yeah.
The first chart is the American Association of Individual Investors Bull Bear Ratio, and if you know, this chart only goes back to like 2018. My report, I took it back all the way to 2009, and there's like a 90%, actually probably even higher than that, probably close to 95% chance when this ratio gets below 0.4. We're at 0.37. I think the low is like 0.32. We're probably at a bottom. I think the worst case scenario now is just a test of the recent lows. And normally when this ratio gets this low, there's a lot of bearish sentiment, and bearish sentiment only comes at bottom. So
Sure.
This is a good sign that we're at least we're starting to base. At best, we're starting an intermittent term rally. And we'll look at it as it goes forward here. But last week, I think my next chart, we'll flip to the next chart here. This chart is the weekly SPX. It goes back to 2022. And normally when the weeklies get below the lower Bollinger Band, which it did last week and actually the week before, actually got 100% below the Bollinger Band. That's including the open and close. Those are buy signals, intermittent term. They're usually not short-term buy signals. They're at least multi-week, and sometimes they can be multi-month. The one we're kind of looking at right now, we did close below the Bollinger Band. That's a couple of weeks ago. And also I do the weekly VIX in the same way. If it gets above the Bollinger Band the same time as the SPX gets below the lower Bollinger Band, that adds to the strength of the signal. And I circled the last time that combination happened, and that came in 2023 of October at that low right here. So we got to close below the lower Bollinger Band, and the VIX closed above the lower or the upper Bollinger Band. So that's kind of a double signal there. And both of them work well, but you combine them, it actually adds power to the signal. So I think the bottom's in. Worst case scenario is the test of be 2 weeks ago low, and actually starting to look like that probably won't happen. We're probably off and running right now, and also seasonality's turned bullish here all the way until mid-April.
Sure.
So I think trends up. Here's another view. This goes back to 2021. Previous times when you close below the lower Bollinger Band, you get at least bounces. A lot of times you get back to the mid Bollinger Band. Usually at a minimum, mid Bollinger Band comes in around 595 range. You can see it over here, approximately that 590 right now. So probably heading in that vicinity. Maybe we'll do better. Don't know. Here's what needs to happen, or actually I like to see it happen, which is the Zwag breadth thrust indicator. Basically, it's a 10-day, or it's NYSE advanced issues over NYSE total issues, 10-day average of that. Needs to get below 0.4. Did hit 0.4 on March 13th, and needs to rally up to 0.6 by Thursday. Okay. So I don't know if that's going to happen or not, but Today's Tuesday. We got a couple more days if we get a sign of strength here. So what you need after a bottom, you need a sign of strength, and I was hoping that's what's going to happen here. Not sure it'll happen, so we'll have to wait and see.
Well, thankfully you'll be on Thursday, Tim. Looking forward to seeing if we get to there, yeah?
Yeah.
Well,
yeah,
Tim,
it would be.
Please stay right there, folks. We'll be right back with Tim Ord right after the break. Welcome back, everybody. This is Jacob Shoup. We're joined right now by Tim Ord of the Ord Oracle. You can go check out his website at ord-oracle.com. Tim, it looks like you're taking a look at some gold charts. I also want to say as well, an equity that you brought up, Goro, is doing quite well.
Yeah, I think something's big going on here. And we're going to go this. There's a couple of charts I want to cover. This is one of them. This middle chart right here is a weekly XAU gold ratio. And when that ratio moves up too fast or down too fast, it pushes the RSI to extremes. And the extremes are where turns happen in the market. I marked in red here the times when the RSI of the XAU gold ratio on the weekly time frame got above 70. And it works pretty well. This chart goes back to 2013. Last time we had a sell signal, I guess, was 2022. Went right into a buy signal. We had a buy signal last year. This is the blue circle, which is the RSI hitting below 30. But what I'm watching here is the current RSI. We're at 58.87 right now. It needs to get up around 70. And at that time, this ratio has gone up too fast, too quick. And I think this ratio may get back to 0.085, which is basically the previous highs. What it does there, I'm not for sure. If it punches through, that's fine. If we don't, that might find resistance. But our current reading right now is 0.59. To get 0.085, this would be a huge rally in the XAU.
I see.
Actually, the pattern that may be forming here on XAU, to me, it looks like a head and shoulders bottom. This is the bottom down here. And if it is a head and shoulders bottom, it has an upside target 255. We're coming in around 178 right now. So I'm thinking this, and once you break this trend line right here, this blue trend line right here, you should see a sign of strength. So the market probably is going to get stronger before normally when you go against the resistance line to get through it, you need a sign of strength.
Okay.
And I think we're going to get through it. So what that implies, you're going to see a sign of strength. Sign of strength is big volume and big price spread. So I think that's what's going to happen here in the coming weeks. You're going to see actually the gold market actually get stronger rather than weaker. So it's going to be the biggest part of the rally is still in front of us. I'll put it that way.
Sure.
Here's this is kind of a momentum chart, measures the momentum of the up-down volume. As long as it's above zero, it's in an uptrend, and the higher above zero, then there's more up volume than compared to down volume. So the percentage up volume goes up as this ratio goes up with it. So we're really strong right now. We're coming in around 18, close to 20 range. And so the internals of the XAU is actually really getting strong here. It's very seldom it gets above plus 20. Last time it did back in, looks like July 2019. So internals for the GDX is really strong right now. And I think it's actually going to continue. It's probably going to do a lot of this kind of a sideways pattern here. Is what happens in uptrends. It just stays above zero. And I think that's probably what's going to happen here. We're actually going to go quick because I want to get to a chart here. This is a chart that I think may develop. This is the monthly HUA. That's HUI index compared to GDX. I use HUI because it goes farther back than GDX. And it's a 12-year cycle between the equity market and the gold index market, or the gold stock market. And I'm thinking we're turning up here where HUI will outperform NDX, which is basically the NASDAQ stocks. And when this ratio is rising, then gold stocks are outperforming the NASDAQ stocks. And so since 2012, in general, this ratio has been going down, showing that NDX is outperforming the gold stocks. Well, so it's just kind of a 12-year cycle here. If you notice 2012, gold stocks were outperforming the index stocks. And now I think we may be turning up here where the gold stocks are starting to outperform the index stocks. And that actually has been true since about January 2024. And I also measure the ratio of this HUI to index. And so when it gets above RSI of 50, so like here, you notice this ratio RSI stayed above 50 for 12 years. I think we haven't been above it. We're kind of knocking on the door right now. We're above it, 55.79. But I'm thinking this ratio is going to get in the 50s range and stay in there. And so for possibly the next 12 years, there's a chance that gold stocks may outperform the index stocks. We'll have to wait and see if that's going to be true. But the reason why I'm bringing that up is because a lot of these stocks, this is a stock we talked about last Tuesday, I think it was. And a lot of these, this is one that's particularly strong, which is called GORE, I guess, is Gold Resources. And there's a huge sign of strength right here. You get that much strength, even back at this rally from here to here, you compare the volume where it is right there, compare it to right now, something big's going on here. So this is the beginning of something pretty really big, I guess. And you got the Bollinger Band starting to squeeze. That means once the Bollinger Band's starting to squeeze, that kind of is right before acceleration happens. When things become dead, the opposite occurs. When things become extremely lively, the opposite occurs. And so this market, as far as GORE goes, we'll just call it GORE, has really gone nowhere since 2023.
Right.
Went from $1 basically down to, 30 cents. It's fairly narrow trading range, so it's getting ready to do something. With this much energy in the market, it suggests something big is coming to the upside. Can it fail? Yeah, there's always a possibility it's fail. But this is one of the strongest stocks I see out there, no matter you're looking at the equity market or you're looking at the gold market or anything. This is kind of an unusual pattern. So to me, this is a good find, I guess you might say. Will it work out? It's pretty, the probabilities say it will, but nothing's 100%. But it does look good. Going forward, because this stock really hadn't done anything since 2016 other than go down. And so for something, now we're at a value situation here where smart money, or somebody's buying it, and evidently smart money usually buys at bottoms and they sell at tops.
Yep.
And with this big of a rally that's going into the upside, if you compare what is done here, there's no other time going back to 2015, which is 10 years, that this is much energy in the market that has happened to the upside. So I don't know. We'll wait and see, but it looks good. I think this is just the beginning. It's got a long ways to go from here, and so it could be another 12 years according to this chart. So I don't know. Could be something big happening. I did catch the big move back in 2000. And me and Tom O'Brien rode that to the moon.
Oh, yeah.
So maybe this will happen again. Don't know. But so far, the setup is there. So we'll have to wait and see that works out.
Tim, thank you so much. That was just educational, as always. We're looking forward to talking to you on Thursday, all right?
All right. Talk to you then. Thanks a lot.
Thank you, Tim. Folks, if you stay right there, we'll be right back for a very short segment to wrap up the day.